But it's a company that's growing fast, that's profitable, and there's a lot of free cash flow. And I think that's about the end of the research that most of the people buying into the stock will be concluding.
Max, does it seem like people are truly believing and have done all their homework in terms of the Alibaba story, or is part of this the larger tech investing frenzy? If you look at the overall markets, if you look at how the Twitters and Facebooks have performed, is it more just every equity investor is just looking for a place to win in the short term?
So it's a great question. The truth is people almost never do their homework, and on a good day they pay Manhattan Venture Partners to do their homework. So I'm sort of glad about that on a selfish level. I do think there's a momentum issue in any time you get a big IPO. Let's be honest, we're sophisticated here. An IPO is just the world's biggest roadshow promotional story there is, right? And a successful one gets people mighty excited. This is an exciting company in its own right, but there's an added layer here, which is what you're paying those bankers for, to whip people into what's often called a FOMO frenzy, or fear of missing out. And there's more than a little bit of that here. And there's a couple of folks who are a bit frothy, not just in the markets, but around the mouth on this one. That being said, huge profit numbers. We expect 12.5 billion revenue, more than 7.5 billion in terms of earnings. It's going to justify at least a bunch of that froth.
Mia, from all of your reporting, as you speak to investors, potential investors, is there anyone not playing?
Yeah, I know.
Really?
People who are not playing, and those are the people who did their homework, and they don't have the FOMO of fear of missing out, and those are the people who know the risks. Do you know how many times the word risks was in the prospectus? It was over 100 times you heard the word risk mentioned, and that's because there are a variety of them, especially when you think about how China, the Chinese government, is very involved with this company. So there are risks as it pertains to every vertical within this company. If you take a look at e-commerce, well, guess what? China has censorship rules. If you take a look at what's happening with the ability to take the internet not just to tier 1 and tier 2 cities, but to tier 3, 4, 5, well, guess what? Who manages the internet and the infrastructure of the internet? The Chinese government. And let's not forget Alipay. Who manages the ability for a bank to be connected to Alipay? Well, guess what? It's one of the top 4 state-owned enterprises. And by owned, I mean the fact that Chinese government owns the bank. So there are a lot of risks. Not everyone's playing that I've been talking to.
Cory, what do you think?
You know, there's an amazing document. First of all, the S1 filing is really fascinating. You can be very bullish about the company, read some wonderful things in there. But as a pessimist that I am, you know, very early in the filing, there is a document that shows, a graphic that shows how the business is set up. It only shows portions of it. It leaves off about 190 of the subsidiaries of this company. But it shows this fascinating ownership structure where the shareholders are buying a Cayman Islands holding company that holds shares of a bunch of other companies in the Cayman Islands and the Virgin Islands, that hold in Hong Kong, even that hold shares of other things in Hong Kong and China, where the legal rights will not be able to be enforced, that have contractual arrangements with some companies owned by Jack Ma, the CEO of Alibaba, that Alibaba has no stake in whatsoever. So it's a very convoluted ownership structure. When times are great, that should work out wonderfully. But if times get tough, we've seen what Jack Ma is willing to do, which is take those entities away from Alibaba and control them personally. He's done it before. And it's something I think that, you know, investors in this deal, they might have rose-colored glasses, as Max points out. But when times are tough, this thing might not go so well.
Then, Max, in terms of broader market ramifications, are you concerned about these rose-colored glasses, the fear of missing out, and that everyone seems to be drunk on Alibaba Kool-Aid, and what that means for the way we're investing right now? Does it make you feel like welcome back to 2007 or 1999?
So I think, to be fair, there's a lot to be really genuinely excited about, and that you do your homework and you get more excited. You're looking at 84% market share in e-commerce in China. You're looking at a company that probably did a better, more graceful pivot to mobile than anyone else you've ever seen here. But you're also looking at a company that you can't see all that well. There's not a huge amount of transparency here. There's a lot of opacity. I think Cory's comments are well to take heed of in terms of Alipay and the misadventure around how Alipay was separated out from Alibaba. All that being said, I think we should be a bit careful here, because the Chinese government hasn't been exactly a headwind for Alibaba. It's been a tailwind. If the government didn't protect this market, this would probably be a smaller company, and you'd probably see a bigger role for things like PayPal and eBay and Amazon in a market.
I had an analyst tell me that Alibaba sets the rules with the Chinese government instead of bending them. just to give you the sense of how intricately involved they are and how intertwined that relationship is.
Okay, but maybe that relationship is perverse, but guess what? It really works for Alibaba, so wouldn't that be an argument to buy in?
Yeah, and if you think about where the competitions are really happening and what turf it's happening, it's not really happening in the United States. Alibaba's not looking to take over Amazon or eBay in the United States because the retail infrastructures are so set up here. They're really looking to take over China. And one could argue your comment about how well they've done with mobile penetration, they actually haven't done that well when it comes to the m-commerce as it compares to Tencent, which has done a great job at integrating m-commerce and social commerce on their WeChat platform.
Kojo?
Steph, you say that the suggestion that it's working now means it's always going to work. It's a question of risk, and where is the risk and how much is that? If the pricing we're talking about now is about 33 times operating profits. In other words, from an income statement basis, it would take 33 years on a trailing level, or if the growth rate continues anywhere near what it's slowing down to, maybe 20 years to get the profits back for what you pay in the stock. I'm just sort of a back-of-the-envelope math here. But the risk that's introduced by that government control, I think, is tremendous. It's a very different entity. It's not a question of what was working in the past. It's a question of, is that going to be there 10, 15 years from now, and will anything really big have changed to take away their ability to make money? I think that's something investors would want to take heed of.
But then if fundamental analysts that cover Alibaba, who read all 435 pages of the prospectus, are they Don Quixote shouting at windmills because their PMs are saying, guess what, you may be right, but I got to get in this deal because I can't underperform the market?
Fools rush in, Steph.
Yeah, and you don't know how long people are going to be holding on to this stock. You have no idea of their horizon of how they're going to have that on their balance sheets or on their portfolio. So it's unclear.
Yeah, I mean, it's also true that some folks bought these shares in the private market 6 months, a year ago. That's part of what we do at Manhattan Venture Partners. So for some of them, they took a little less risk because they bought it maybe $20 ago. That also has to be factored against the following. Cory's points are excellent, but in every stock market transaction, there's a tension between managers and owners. It'll be severe here, but it's there. And that you're always paying today for a future you don't know, and you're looking at the past, and that's a little bit like driving your car out of the rear view mirror, right? It sounds cool. It might be a great stunt, but it can produce an accident.
And the Chinese government is kind of like fairy godmother. They take this wand and they wave it. When they wave it, things happen or things don't happen. And there has been a precedent in the past where a VIE, this variable interest entity, has been deemed illegal. Now, good luck trying to deal with a Chinese company that's going to be domiciled in the Caymans, but listed in the United States, and try to take that to China's legal court system.
It's just not going to happen. The voice of reason.